Happy Halloween. It has been another wild one with mixed messages from the Fed, markets, and the economy as a whole. That's my little friend here, but she's making a lot of appearances lately. They start with the Fed meeting. They did cut rates by 0.25% as expected, and that was great news, at least until Jerome Powell started talking. He said that the December cut is not a foregone conclusion, actually ended up saying it's far from it. And those 4 words basically wiped out the initial optimism and basically pushed rates higher again, at least a touch. But the Fed also announced they're stopping the balance sheet runoff, which just means that they're going to stop shrinking their pile of bonds starting on December 1st. And that's generally actually good for rates, mortgage rates, because it puts liquidity back into the system. But instead of buying longer-term treasuries that directly help mortgage rates, they're going to focus on short-term bills, which limits how much this is actually going to help mortgage rates. And we also heard from a few Fed members, and it really just showed how disconnected they are. One said that inflation is still too high, and even though they said that, but they haven't received any updated reports because the government shut down. And if they adjusted for things like the temporary impact of tariffs, overstated rent numbers, as well as portfolio costs like we've talked about, then inflation would actually be right at the Fed's 2% target. And we, from another member from the Fed, from Dallas, said the same kind of inflation is too high, and said the labor market looks balanced, but it's just not true. We've kind of seen weak job growth, multiple months of losses in the ADP numbers, and huge layoffs and announcements from companies like Amazon and Microsoft. And the mismatch between how the Fed's reading the job market and what's actually happening on the ground is just growing. We are still in the government shutdown now, 30 plus days in, and becoming a bigger issue. If it continues to drag on and delays more reports like the BLS jobs number, the Fed won't have enough information to justify another cut in December. And that uncertainty also, hurt mortgage bonds, basically. And rates are being pulled in opposite directions. The Fed's actions are supportive, but their words and the lack of information that they have are going to hold markets back. Once we do get past the shutdown finally and see the next round of jobs numbers, we should have a better idea what to expect, though. So have a great weekend and a safe Halloween. I'll see you next Friday.